Welcome to On the Rise by Fresh Business Thinking. In this interview series, we speak to exciting entrepreneurs we predict to be the next generation of household names. On the first episode, I talked to Tom McGillcudy, founder of Tickr, an app that lets people invest in companies that are creating a positive impact on the planet.
If you got this right and you got a groundswell of people doing this, you change the future basically. Because if you make this way of investing the default way of investing, the world's changed. If you can tilt the scale of capital markets, billions and trillions, to focus on these things, the real world change on the ground is like massive. Tickr was founded by myself and Matt Latham. We're two best friends. We met on our first day of a Barclays graduate scheme 11 years ago. We actually lived together for the first 2 months. I'm from just outside Manchester. He's from Liverpool. So we were the two of three like working class English grads on the graduate scheme. Everyone else had these amazing educations, these amazing backgrounds: Harvard, Yale, Oxbridge, educated in Singapore, China, and we didn't have any of that. And when we got into the industry, we saw, after a few weeks, we had this conversation, Matt and I, about how we felt like this industry was unnecessarily complex. It's like 2010, 11. And, you know, the people that we'd grown up with, our family and friends, you know, had never invested before, never been to university, and never thought they could do that. But there was a lot of basics you could actually teach people. And if you taught them the basics, they could then provide for their own financial future. The way we saw it was they were getting robbed of a financial future. You know, that was our lens to look at it through. So that was after 2 weeks of being in the industry, we had that chat. And then as we progressed through the industry, about a year or so later, I started to have this big like crisis of mission. Like, what am I doing in the world? And the climate became an issue to me. This is like 2012, 13. And I wanted to do something day to day that had an impact on that. And I couldn't see a way of expressing that within the investment industry at all. And I then left Barclays and joined a company called Wellington Management. And the reason why I did that was, I don't know if you're aware of the LIBOR scandal and all the stuff that happened at Barclays like back in the day, but the organization started to change a lot. A lot of people leaving. So I was like, right, I need some stable ground to figure out my next move. So Wellington was always only a stepping stone for me. And I like a 12-month stepping stone. But when I joined there, I got introduced to a guy who was visiting from the San Francisco office. Actually, I just bumped into him. I wasn't introduced to him. And he explained to me that he was working on this idea to launch a investment fund, a portfolio, to beat the market every year in terms of returns, but only by investing in companies solving world problems through their business models. So half climate, half non-climate. The non-climate stuff was like internet access, housing, water, education, like human empowerment was what we called it. And I was like, right, that's the thing I need to do with my life, basically. I convinced him to let me work on the idea with him in my spare time in like 30 seconds. And it felt like a calling to me. It felt like someone had told me what I would spend the next 30 years of my life doing. And I remember saying to myself, whether it's with him or not, I don't really care. I'm just going to do that thing.
Yeah.
He's a guy called Eric Rice. He's now the head of impact investing at BlackRock, who are the biggest asset manager in the world. They manage about $10 trillion, something like that. And he kind of took me under his wing a bit. And I started working with him in my spare time. And then after a year, that became my day job. And my job was finding investment opportunities that fit into those criteria. So I was looking at housing companies in India, education companies in Brazil. Tesla was one of the first companies that I was an analyst on in 2014. So like 7 years ago, before it was the company that it is today. It was much, much different back then. So with these exciting companies of the future, they were all solving these big problems that we cared about. And every year that we worked on that portfolio, we beat the market in terms of returns, and all the companies do these amazing stories. And we got that portfolio up to about $1 billion. There was 4 of us managing $1 billion. During that time, Matt, who is the co-founder, texted me 2016 and said, there's no way for us to invest our own money the way we're doing in our day jobs. Matt had come to a similar point doing something similar as well. And we were like, look, we care about this. This is the future of the world. And this is the way that what we started to talk like was, if you got this right and you got a groundswell of people doing this, you change the future basically. Because if you make this way of investing the default way of investing, the world's changed. If you can tilt the scale of capital markets, billions and trillions, to focus on these things, the real world change on the ground is like massive. So we started to see investing as the mechanism to change the world. Capitalism is very, very efficient if you can tilt it in the right directions. That's the way we kind of felt. And the more we talk to people about this, so Matt, we got working on this idea, and the more we talk to people outside of the industry about this idea that we were working on, the more it captivated their imaginations. And we thought that because of the way it's framed, you know, these companies that are addressing like climate change, housing, education, healthcare, you can bring people to the table that have never invested before because they get it and it means something to them. And in that way, you could tackle the financial inclusion issue that we addressed at the beginning of our careers and this impact issue that we care about together perfectly. They seem to fit like so perfectly together. So you could get people to the table to invest for the long term, not trading, not crypto, not randomly buying stocks, but proper investing the way it's done by professionals like Warren Buffett. But all the companies are creating the future that we all want to live in. So we started working that idea in 2016, and that's what we left our jobs for in 2018. So that's kind of like the backstory of how we got to the point of starting the business.
What specific circumstance triggered you into, you know, creating Tickr? The
trigger that did it for me, the mental framing that did it for me, was I want to be when I'm whatever age I am. And this can be a morbid, but it's a non-morbid thought for me. When I'm on my deathbed, I want to look back and say I did something useful, basically, and I did something that mattered. You know what I mean? So like. And by the time when Matt and I left our jobs, we were 30, maybe 31, 30, something like that. Not married, no kids, no massive debt. Had savings because I've been working in the industry, saving to buy myself out of the industry. I was like, with that kind of thought, when that backward looking thought from the future, plus the fact that if I can't take a risk now, who could? You know, like if I don't do it now, like whoever could take a risk like this? It became an easy decision. It became more like, with Matt and me, it was more a risk of us not doing it and someone else doing it. And in 10 years' time being like, oh, remember that thing we were never going to do. It became such an easy decision in the end.
How do you find all these, you know, these organizations to invest in?
What we're investing in at the moment is like bigger established businesses. So listed on the stock market. Right. So not necessarily Tesla, but you know, a company not too dissimilar to that, Beyond Meat and people like that, Vestas Wind Systems, who are the biggest wind energy provider in the world. These are the companies that we invest in. How we find them is that where we look is we have data sets that are internal and external that we use, where we analyze where companies' revenue comes from. Because the biggest, if you think there's like, let's use easy numbers, 10,000 companies that are listed on the stock market in the world, there might be 600-700 that qualify as like an impact investment. And by qualify, what we look at is where they get the revenue from. And what we're trying to invest in an ideal world is a company where 100% of their revenue is from like a pure play source. So like Vestas is perfect because all of their energy, all their revenue is from wind energy in some way, basically. So we're trying to find those companies in all these different sectors, basically, that hammer these themes. And that's important because you get that the kind of the purity of the mission of the company, and the most non-discriminatory way to assess whether a company is positive impact or not is where they earn their money, basically. Because you get a lot of companies that say, oh, we do X, Y, and Z, but they're not really doing that. Like Coca-Cola has a nice mission statement, but they're still selling fizzy drinks that rot your teeth. You know what I mean? Like, so you're trying to find companies where the thing they sell is pure and you can identify it. And we use our own research and external research to help us. And that's the big first sift, basically, that helps us identify the companies.
So it seems very data-driven then.
A lot of it is data-driven, yeah. That's the way we can make it scalable and replicable. But data is where we look for, yeah.
Cool. Yeah, where does Tickr's revenue come from?
There's a few sources of revenue, but the main source is every customer pays us £1 a month as like a subscription to use the platform. And then once the balance goes above £3,000, we charge 0.3% per annum on the balance above £3,000. So everyone pays us a fixed fee, and then when your balance goes big, we take a small asset-based fee when the balance goes bigger. That's the main revenue of the business, and then we have a few additional revenue lines, which are, one is we offer our customers to calculate and offset their carbon footprint in the app. So we charge a subscription fee for that service. And then the other area is, it's not something our customers pay for, it's actually something that they get discounts on. So for example, we have a partnership with Bulb, who are the biggest renewable energy company in the UK. Our customers get a special Tickr discount for switching to Bulb. And we get revenue for that, but the customer just gets discount. So it's not something the customer pays. So those are the main sources. Those are the main sources of revenue.
Yeah. Well, why do you think Tickr has been so successful?
There's many reasons. If it was a gun to my head and I had to pick one, I would say because of the DNA of the people in Tickr, basically, is the answer. And I think because of the DNA of the business, we get to bat above our weight in terms of attracting high quality talent, because high quality people want to come and work for something they can believe in and a mission. And I think that's propelled us further forward than we would have been if we were just an investment app, for example. I think we attract like mission aligned people that are willing to put the work in for us, and that's helped us get to a further step. So it's definitely the people in the team, I think, has been the defining factor for us.
When you first started, like, how did you get your name out there?
When we first started, it was hard. So to get the first like 1,000 customers, it was like hard yards. So obviously everyone I'd ever met got a message, basically.
Right.
Every connection on Facebook and all those kind of things. And then we would go and speak at any event that would have us. We'd go and pitch at event nights, and we'd give out referral codes and things like that. And you get to like 1,000 customers. And then you start getting to a mass of people that will start referring their friends and telling their friends. And that 1,000 might become 4,000, 5,000. And then we introduced the referral mechanism. So whenever you refer a friend, we plant a tree for both of you in Indonesia. Now we map the trees back to our friends in the app, and you can see your friend's trees, you can see the forest, and every time you log in, the trees grow. So like we built in that kind of referral kind of mechanism to kind of get that fire in. And then we started to do some marketing on the side, and then that starts to kind of grow the customer base. So that was like the first, 3 to 6 to 9 months of getting the word out, basically. And that's how we did it.
So initially, it was very kind of face-to-face marketing. Just
you can waste a lot of money doing paid marketing and things like that in the early days when you're either not ready for it or there's better quality customers to acquire or to find. And paid marketing in a traditional sense is a small component of what we do. It's a small component. Most of our growth is referrals and word of mouth, and even the stuff that we pay for is not flogging ads on Facebook and Google platform. It's different. It's influencers, affiliates, that kind of thing. So it's you acquire a better quality of customer that way, I think.
How did the pandemic affect you?
So for the business, it was a good thing overall. I think if you think about, I think there's like 4 big trends on which we sit in the middle, but there's like the 2 that are most obvious for the pandemic was this desire to invest is new in Europe. It's always been there in the US, but it's a relatively new thing in the past 12 to 18 months in Europe, and that kind of sped up during the pandemic. So we benefited because of that desire to invest. And then the desire to have a positive impact at the same time. We are at the intersection of those 2 things. So I think those 2 things have just gotten stronger, which is a result of the pandemic. The business has performed well because of that. So if you look at all the metrics of the business, there versus a year ago or a year and 6 months ago, whatever the start of the pandemic was, it's kind of transformed in many ways, which is a positive for us. I feel very fortunate saying that because I know a lot of people's lives are not. A lot of people are not able to say that with the work, but we were positively impacted, I think. The timing was not ideal for us because we were going through a round of funding when the pandemic hit.
Right.
And the startup funding market kind of dried up for like 6 months. So we were about to raise a round of funding. Lockdown, it was announced in the UK, that kind of disappeared. So we had to come back on the scene a little bit later and get it done. Obviously, that was helped by the business performing well in those months. So, but overall, it's benefited us, I think. But we're very fortunate to be able to say that.
I know it's definitely within the pandemic, but the GameStop thing on Wall Street happened. Did that affect kind of the people coming to you at all?
Yeah, I mean, it happened in like January, February. So we saw a massive uptick of people using the app. And I think there's a pro and a con of that, basically. I think the pro is obviously more customers, more eyeballs on what we're doing. The con is, I think people in the industry have been sold a story. They've been sold a meme of what they think investing is. Right. So you won't get that itch scratched by using Tickr because we are a long-term, steady growth, wealth building platform with this positive impact and DNA. We're not a quick buck platform. You're not gonna download Tickr, put £5 in, and it'd be worth 500 quid in an hour. That's like not what we are at all. So I think we benefited, but the industry now and us needs to do a good job of actually teaching these people that are in what actual investing is from actual investment professionals, not gambling. You with the GameStop stuff, or name another company, or name a random cryptocurrency that's just launched that's worth 1p today. You may as well go and bet on a horse that's running, And I think a lot of the people that are betting on horses are using those apps now, and we're not the app for that. We're the kind of antidote to that, and the antithesis of it. And I think that will show that out in time, So I think it was a benefit overall, but not without some complications, I think.
Right. For the on the fence investor watching this right now, what would your tips be for someone who kind of wants to understand how to get to that point where, like you were saying before, like you are with, like you understand crypto is and how to kind of get into a point where an experienced investor would invest in?
Forget I do Tickr and forget Tickr exists. What I've done over the past 10 years is I've made mistakes from investing. So the first investment I ever made was when I went and worked at, as soon as I got Barclays, we all opened brokerage accounts. And this is obviously before I cared about the world. I bought an oil stock that I didn't know and didn't understand. And then 2 weeks later, it went down 50% and I sold it. So I just made a 50% loss in 2 weeks with whatever amount of money it was. But it wasn't an insignificant amount of money for me at the time. So then I was like, okay, right, I need to really learn more about this stuff because that was a stupid mistake. So if I was starting out again, and this is what I would say to anybody starting out, is I would start from the position of building proper investment habits with the majority of my money. Let's call that 75 to 80%. And I would invest a set amount every month and increase that amount every month as I earned more. And I'd invest it in a diversified way. So not in one or two, but maybe 100 or 200 stocks, whether that's via a fund or an ETF, most efficiently by a fund or ETF. And I would build that up and continue to do that and think about that as a 5 to 10 year game of doing that over and over and over and over again. And as I'm building that pot up and say I've got enough now, if I really want to, and most people don't, this is like, I'm speaking to like the young gambler in certain people. Even this second bit is not necessary and I wouldn't necessarily do it. But if you have the itch to invest in a few single line random things as like bets, see them as bets, see them as the casino, and do it with a tiny portion. So segregate 5 to 10% of what you're doing and do it with a tiny portion. Every now and again, one of them might come off. It's not because you're smart, it's because you got lucky. Just bear that in mind. But everyone wants to get lucky with investing every now and again. But just do that majority over and over again. That will put you in the best wealth position you can be in 10, 20 years time. If you start doing that as a 21-year-old, by the time you're 40, you'll have a really decent amount of money behind you.
The last and final one is, where do you see Tickr in the next 5 years?
So you think about what we stand for as a business. On the way in, the people using our app, they've never invested before. So that's a financial inclusion issue that we're solving. And on the way out, or the other side of the business, we're changing the way an industry operates. So if we can get millions, tens of millions of customers, Europe and beyond, then we can actually make a dent in financial inclusion, because you've actually got tens of millions of people who never would have done this before doing it. So you're kind of they're providing for their own future, which is a good thing. And you're getting those people who've never invested before to invest with impact. So impact investing is their default way of doing things. It's the only thing they've ever known, so they won't ever do anything else. That's how you change an industry on the other side. That's why we need to scale. We don't need to scale because we want to get a valuation or because we want to IPO the company or because we want to do whatever. We need to scale because we need to solve those two problems, basically. So that involves European-wide expansion and beyond, basically. Exactly where beyond it will be determined when we're through the European journey. And we need to build a globally important business, because that's the only way you kind of tackle those two things.
My mum got into investing with the GameStop things. That's what I was asking, because for
Your
her,
mum did?
She's been going a bit crazy with it.
I've not heard many people's mums doing the GameStop thing, I can say.